Shane, how's it going?
Hey man, it's going. I'm just busy. Busy. We're recording on Wednesday this week, February the 22nd instead of tomorrow, Thursday, because I'm out playing golf. I got 36 holes of golf tomorrow, another 18 holes on Friday, and 36 more on Saturday. So getting a little stay-at-home golf trip going on this week. Should be fun.
Yeah, well, hopefully the score's low, so your arms work when you get back,
Yeah,
but
we'll see.
should be good.
Fewer swings the better.
Yep, as with trading, right? Don't want to overtrade. So, um, for anyone tuning in, today is February 22nd, and we just had the Fed minutes come out, so we'll hit on that. I usually view it as just a catalyst. We already kind of know what's out there, but we'll talk about that. So I'll flip it over to our slides.
Sounds good.
All right, so let's get into it. So first one, looking at SPY and Shane, yeah, I kind of wish we were having this on our normal day tomorrow because we're just sitting at a line in the sand right here on SPY. I was just talking to a client and, you know, we shoot up from here. Looks like we might have a bull market in our hands, but we break down here. I think it's really going to start setting off some sells, and I think there's some downside from there. What are your thoughts?
Well, first, I'd love to know what's your definition of a new bull market? You said
So
if we bounce from here, we're in a new bull market. What do you mean about when you say that?
yeah, so when I look at that, we've talked about it. Technically, it's been really hard with this rally from October to sit here and not look at this and say, hey, this looks like it might have some upside. Defending this level, I think for me, it starts to make me question a little bit. Did we get this wrong? Because as you know, the fundamentals are just screaming bear market. And big picture, we've been in a downtrend, so you can't ignore that. But defending this level here, I think for me starts to make me question my, views a little bit, but you're the portfolio manager here, so it's always interesting. Sometimes I'm guilty of a shorter term time horizon, whereas you're good at the long term. But that's kind of what I'm seeing. If they defend this and hold it up, I think that might start to, paint that picture that maybe we are turning a corner. But, pretty ugly fundamental picture has to fight.
Yeah, I don't think there's any standard definition of what's a new bull market. A lot of people will say a new 20% rally from the lows is a new bull market.
Yeah.
Um, I mean, is that in alignment with your understanding? You're the one with the CMT letters. I don't have any CMT letters after my name, so um, I'm just asking you a serious question. I don't
Yeah.
know what's your do you have a definition of a new bull market?
For me, I think that it's kind of narrow to just, categorize something as a bull or bear market based on a metric like that. I think it's more about what is the long-term trend. And right here, I'm just seeing the 50-day cross the 200 and defending a level here. If that continues, it's telling me that it's trying to get that uptrend, but as you can see, all the averages still point down, or I guess the 50s come up, but that's not unusual. We had that happen back here, and it started again here. So that's how I look at it, is just, are we turning a corner? And I see this level and I think that's meaningful. Doesn't mean that bull market ensues, but if it defends that
Well, How
level,
how will you know if it did? I mean,
yep.
it's okay if you don't know, but I'm asking, how will you know if you're in a new bull market? Is it above the 200-day moving average? Is it four higher lows? Is it a 20% run off the bottom or none of these? I mean, I don't like what do you think?
Yeah. So for me, it's defending a key level like this. And I'm not talking just one day. I would love to see, to meet that kind of definition that maybe the trend is changing, is establish a base here for a few days, hold that and go up. But today we're seeing one little bounce, totally expected. I think in the coming week or so, you're going to see if we break lower or we break higher. But that's how I'm viewing it, is just if that technical picture starts to, change that trend a little bit, I start to wonder, what am I missing something? Or as you know, sometimes you can just push the market up here and that's where they break it. It's not always the most obvious levels.
Hmm. So I'm still trying to figure out how you know if you're in a bull market, because I don't know. Do you just not know? Or when do you know? Do you ever know?
I think for me, it's when a long-term average starts pointing up, and usually you would have a fundamental backdrop that favors that, right? So Fed lowering rates or providing liquidity, which they're not. So that certainly doesn't help that picture. You're starting to see layoffs. So again, not helping that picture. So when I look at that, that's not backing it up. So when I look at this, it's really just if I can see that 200-day maybe start come back up and get that or have that level get defended, then I start to that's maybe that corner we turn where bull market or just long-term averages start to point up. Looks good, but right now we're 1 day sitting on this level.
When you say have that level get defended, what do you mean by that?
Yep. So right here, it's 400 on SPY, ES 4000, right in there. If it holds that level, because this is a very key level, this is a level that it could not hold over back here when we had this rally. We failed and came back. Now we broke through, but we're coming back to it again. If this holds, so if we do not go lower from here, but this gets, if price stays in there and it starts to trade up, that to me is the level being defended. But
And
1 day,
who's defending it? Like when you say defended, what is that? Like who do you mean by that?
so that means, more buyers than sellers in the simplest term. But usually that happens when you have
So the buyers are defending the level from breaking down. Is that what you're trying to say?
exactly. So
Okay.
you had a consolidation up here at a level that we had highlighted before, certainly meant something. It got pushed down here. And this is where if it gets defended, so a lot of buyers step in and hold this level, that's sending a message. But on 1 day like today, I'm coming into it. I would have been surprised if we had a continuation day. You hit a level like this, it's going to consolidate. It's going to just kind of digest yesterday's move. So too early to call it here. If I had to bet, I would bet on the downside, but getting in today and calling it a, move lower or higher, not the best place to make that call.
Yeah, good news is that you don't have to bet. Just because the market is sitting there begging you to bet with him all the time does not mean you have to. For what it's worth, I have a much more simple view of the definitions of a bull or a bear market. Um, I mean, a bear market is defined as a 20% drop from highs. Pretty simple. Correction is a 10% drop from highs. Um, that said, you didn't know we were in a bear market until it was down 20%, right? So the beginning of the bear market, like on the screen right here, the beginning of the bear market in the SPY was basically January 4th, right? At the high
Mhm.
where we got that all-time high. That was the beginning of the bear market. And the following day, we were in a bear market. And the following week, we were in a bear market, right? But you didn't know for sure that we were in a bear market until it finally clipped down 20%, which was what, like April, May, something like that.
Mhm.
So that whole period you were in a bear market, didn't even know it.
Yep.
Um, I don't know if I buy into, I mean, my base case is that a 20% move higher from the lows is not a bull market. Like, I just don't think that a bull market is defined as the inverse of a bear market definition. Um, I mean, if that were the case, there were, two bull markets in the Nasdaq in the year 2000, which, doesn't look like that on a chart just because they bounced over 50%, but Nasdaq bounced over 50% twice during the dot-com bust, and it was still in a bear market the whole time. Um, so my current thinking, and I reserve the right to change this or take your advice if you have if a reason to tell me that's not a good way, is like, I don't think we're in a new bull market until we make another new high. That's what I think.
Mhm.
I think we're in
Yeah.
a sideways trending garbage market with terrible economics and fundamentals until we break 479.69 on the SPY, which is way, way, way up there near our logo. And by the time we get there, you will be able to look back and say, well, the new bull market started in October of 2022. when the market made its low, right? But so we might be in a new bull market right now. It's just that we don't know that yet, and it won't be defined until, maybe in my current thinking, until we get to 480. And I mean, 480 is like, that's like another 25% higher from here, 20% higher at least. And so, do you want to wait for that long before you get back invested just to say, oh, well, now we're in a bull market, we got the all clear, we can buy dips again? I mean, I'm telling you, I would, as much as I'd love to say that's a good idea, you're kind of leaving a lot of money on the table to wait for that long. So I'm not trying to pick on you. I just wondered everybody's got a different definition. Some people just flat out a 20% move off the lows is a bull market. Some
Hmm.
people just think that way. I don't think it's quite that simple. But even if it was, you wouldn't know that you were in a bull market until, after the fact. You can only see these things or state these facts by looking through the rear view mirror, which, it's kind of how all performance is. It's dangerous. It's like driving down the road and not looking out the windshield, just looking out the rear view and trying to navigate. It's a dangerous thing to do. And so who knows? Maybe we are in a new bull market and it's just the fundamentals don't align with that. And I don't know. I guess we won't know until we know. And I personally just think I think we could so much more easily make a fresh low in the market, especially with I think the market's finally beginning to understand that the Fed might actually instead of pause their rate hikes, they might actually go to 50 basis point rate hikes from 25 basis point rate hikes to try and get inflation under control because they haven't been aggressive enough. And I think if the market starts actually pricing in the probability of that accurately, the market's going to have to go lower from here. So
Hmm.
anyway, I don't know that I think it's worth getting into that conversation a little bit rather than just looking at lines on charts
Yeah.
sometimes. And so it's good to know what the definitions,
And
can.
I think what's important, Shane, is exactly what you mentioned. How do we officially know we're in a bull market? When we hit a new all-time high. Now, you want to trade, you want to make money, right? It's hard to just 100% cash, sit on the sidelines, wait for that to happen. But what you can do is it's all about risk, in managing that. So down here, you could buy a quarter or, hey, maybe even half your portfolio, right? And if you're right, well, you have a horse in the race. You can catch some of that upside, and then you can get really aggressive at the top. The other option, and yeah, you could sit all cash, and when we get that new all-time high up here by the Elevate logo, you could pile in, and it would kind of, maybe the math would catch up to itself. But the important thing is, Shane, you and I, we can sit here and talk about what market we think we're in and do that all day. But when it comes to making money, if you can manage that risk and understand that we are not officially in a bull market, we're officially in a bear market, or we were. So if you manage your position size down here, you can do very well. But as you can see, difference of opinion, and this is just you and I talking. I would say we're pretty much on the same page. Start looking at the talking heads, everyone else out there, and man, a lot of information to take in, a lot of differing points of view. So if you understand those levels, how to manage that risk, you can do really well in, a bull or bear market.
Yep. No doubt about that.
So with that, moving on, NASDAQ, same thing I'm seeing came up here, and we'll get into it, but the 10-year yield, I look at that every day because what I understand is if that yield goes higher, the Qs or NASDAQ are going to get crushed. That
Yeah.
is not, I think that for me, that's been the clue of where we're headed, and we'll get into that, but
Yeah,
that
we'll
is
see that
not
in
a
the next
bullish
chart. Yeah,
one.
I mean it's again, if I didn't know anything else and I just look at this, I'd say, wow, we're above the 200 day as long as we hold that 200-day moving average level. Oh, by the way, I forgot to mention there's another and I haven't studied this. I think it's actually a pretty good measure. But I was reading something probably from Stansberry and they said if the 200-day moving average goes up for 21 consecutive days, that's their definition. It's just one person that works at that company is their definition. And I think that makes some sense to me. I don't know where they come up with 21 days. Why not 5? Why not 8? Why not 23? I don't know. You got to pick something, right? But if the 200-day moving average puts in a higher number for some consecutive number of days, like you said, it's the long-term moving average is pointing up. I think I think you're in an uptrend. Like it's hard to argue that you're in an uptrend. You might be in an uptrend within a bear market, I suppose. But it's, that's a pretty good test. And so far, the 200-day moving average is not quite trending higher, certainly not for any number of consecutive days. So that's something I'll definitely be um, looking at to kind of just give me a signal of like, okay, maybe it's time to buy dips again.
Yeah.
For now, I'm still pretty cautious of all that kind of thing. I do think rates will go higher. It looks like the market's reacting a little negatively to the minutes coming out. I think, there were people talking about at the meeting last, the minutes say, and I had posted it and shared it with you right before we got on this call, but a few participants stated that they favored raising the target range for the federal funds rate by 50 basis points at the most recent meeting. Or that they could have supported raising the target rate by that amount. The participants favoring a 50 basis point increase noted that a larger increase would more quickly bring the target range close to the levels they believed would achieve sufficiently restrictive stance. So it seems to me like there are a number of people, and some of the non-voting Fed talkers have been out over the past week talking about how they probably do need to raise rates by 50 basis points, not just 25. And it seems like the terminal rate, the rate at which they'll actually pause and stop hiking, may have ticked higher, just given the recent inflation readings that we've gotten. So I think rates are probably going higher, staying higher for longer, maybe going higher faster than everybody expects. And if the market, like I said, begins to price that reality in, then the markets will drop down quickly, and the Nasdaq will go down faster than the S&P 500. So yeah, for now, picture still looks pretty bullish here, but I think this could easily break down below the 200 and the 50, and I think it could even make a fresh new low. I mean, the Nasdaq is still down from year end 2020, so it still hasn't reclaimed all of its 2021 gains. So like if you bought the Nasdaq on January 1st of 2021, you're still down, right? You're down. What's that? 18 divided by 313. You're down 5%. So, is this really a bull market? Hard for me to get on board with this being a bull market, with that being the case.
Yep.
Um,
And the
so
big
we'll
thing,
see.
I think I've brought this up in the past. Everybody tends to go one way or the other. We're either going to crash or we're going to take off on a new bull market. We might also just go sideways. Nobody talks about that one. We could just
Yep.
chop sideways for years.
One guy I follow, Dan Ferris, that's his base case. He's like, I think you want to be in value stocks that pay a dividend, reinvest the dividends, because market's going to go sideways for a decade.
Yeah, so we'll
I
see.
think that's easily possible.
Yeah, but now this chart right here is the one I'm listening to. So this is the 10-year yield, and you can see here it broke this high, and Shane, you drew this downtrending resistance line. Looks a heck of a lot like a pennant formation right here. Shoots up through that. I mean, 10-year yields going higher is not going to help anything.
Nope.
So
That's the most important price in the markets, and it's what all the bonds are based off of. All the borrowing, the profitless tech growth companies need to finance their continued growth is going to be based on this number. The higher this rate goes, the less cash flow they have, the lower their earnings are, or the higher their burnings, because they don't actually earn money, most of them. So yeah, this the higher this goes, the lower the Nasdaq should go, and those prices are usually pretty much inverted, almost perfectly, but not quite perfectly. Sometimes they'll trend together, but it's usually short-lived. So we'll see that in the next chart.
yeah, something else I thought I'd just touch on is gold. I thought that was really looking bullish, but the correlation to equities, it was so strong. And then now I'm looking at the 10-year yield. If yields go higher, yeah, there might be inflation, but that might not help gold a whole lot. So
Yeah.
something to keep in mind.
Yeah, so this chart here, this is the same as the chart we just looked at. The blue line is the 10-year treasury. So I left the lines there just to keep it, keep it obvious what we're looking at. So that blue line is the 10-year yield, and the orange line is the QQQ NASDAQ index. And hopefully you guys can see that I'm drawing on here. So what you will notice, I mean, to me, it's just very obvious that when the NASDAQ is at a high, it's because rates are low. As rates go higher, the NASDAQ will come down. So as the blue line goes up, the NASDAQ is going to come down. And then you see when rates peak, the NASDAQ bottoms. And as rates go down, the NASDAQ goes up. And you get this inflection point where from here, rates go higher, right? And the NASDAQ goes down. And what happens when rates peak again? Rates go down, NASDAQ go up. And so now what you're seeing is from here to, let me just erase these. What you're seeing from here and here is we've got the newest sort of inflection point where rates are now starting to go back higher and the NASDAQ is just starting to go down again. So we'll see how long that continues, but that's what we mean when we say these things are inverse correlated. I mean, it's not perfect one-to-one relationship, but it's, you know, if you zoom out far enough, you can absolutely see that one zigs when the other zags. I mean, this whole area, this whole section right here is just, man, that's like doesn't get much more correlated than that. That's almost a perfect inverse correlation in that box. So anyway, it's just something to pay attention to. If rates go higher, the NASDAQ probably isn't.
Yep. So great point there. And just another tie into rates, but right now, housing market, you're seeing the mortgages go back up. So 30 years at 6.3.
We're doing this on Wednesday, so we don't have the
Oh,
updated numbers. Numbers come out tomorrow morning, so this is not any different than last week. That's why I was like, oh, if they go up again, doesn't look like they moved much. But yeah, that's because we're on Wednesday and this comes out, this data will come out tomorrow morning. So I guess we'll see what that looks like.
we will. So
Sorry, I didn't mean to
no,
interrupt you there, but I
no, it's
figured I
good.
just noticed.
I'm glad you caught it now before I went too in depth. So, well, yeah, we're keeping a little shorter this week. Shane, you're busy, got some golf to go play, and we're just at an inflection point. So, no need to get too into it. But Hedge Eye always out with their good cartoons here.
Yep, the Bulls and the Bears are in the same boat. The wind's always blowing the same way. So we'll see if we can adjust the sails to capture, you know, the amount of upside we deserve. So
Yep.
yeah, I thought that was a quick good one. And the next one, you know, just good stuff from the Babylon Bee. You know, we used to go school shopping, shop for school clothes at the mall. It was like a big event in my life, because we never had much money. So it would be like once a year maybe that we could get clothes, sometimes not even that often. And we would go to the mall, man, and we would try stuff on and it would be fun. Now you just dial up Amazon, have it delivered to the door, see if it fits. I'm actually trying to
Yep.
get some new golf shoes and I can't get them anywhere. And I can't figure out which size to order off of the Nike website. And I'm nervous that I'm certainly going to order the wrong size. It's pretty cool to be able to try on each shoe
It
and
is.
then be like, this one fits the best, but I can't get these new Tiger Woods golf shoes anywhere. Like I've looked everywhere. Nobody carries them, so I just got to guess. Or somebody once told me that you know, like Zappos, you can order like 3 or 4 pairs of the same shoe in all different sizes and then just send back the ones that don't fit. And I'm like, well, that seems pretty wasteful, but it's a good idea, I guess, you know, bring the
It
shoe
is a good
store to
idea.
yourself. Yeah.
But with gas prices nowadays, I don't know.
Yeah,
Shipping and
shoe prices. I'm not trying to buy 3 pairs of these shoes and then get a refund. That's like, that's way too much money. No thanks. I'd rather
yep,
just go to a store, try them on. What the heck?
yep.
Anyway,
So
I don't know. No such luck. So
yeah. Well, Shane, hopefully you play well out there, enjoy it, and next week will be exciting because we come back and we'll see where we end up. Are we going to be higher from this inflection point we're looking at or lower? I think right now, again, just consolidation day today. I think tomorrow's where the move will happen, but we'll see. But that 30-year yield or the 10-year yield is not doing stocks any favors.
nope, and it looks like it's just getting started. We're what's that, 3.916 as we talk right now. So almost back to that 4% level. Down a little bit today. Down about 1% today from the highs yesterday. So cooling off a little bit, but yeah. We'll see. See y'all
Yep.
next week.
See ya. Have fun.
Later, bud.